This is TWiT.
Bitcoin has been riding this roller coaster for the past year. With it, so have those who invested early. Like I said, along with that came new interest in cryptocurrency, helped in no small part by the meteoric rise in value through the end of last year and early 2018. But a new report seems to point to market manipulation. And joining us to discuss what may have happened is Nathaniel Popper from the New York Times, also author of Digital Gold, Bitcoin and the Inside Story, the Misfits and Millionaires Trying to Reinvent Money. Welcome to the show, Nathaniel.
Thank you for having me.
It's great to have you here. So first, even those who might be kind of sort of familiar with cryptocurrency understand what Bitcoin is, but this report in particular talks about another cryptocurrency called Tether. I mean, there are so many cryptocurrencies out there. Talk a little bit about what Tether is specifically.
Sure. So Tether is essentially a cryptocurrency that was created, essentially invented by one of the largest cryptocurrency exchanges called Bitfinex. That's the name of the exchange. And they essentially created Tether to be a cryptocurrency that would always, one Tether would always be worth $1. And so this was a way to move, essentially to move money around the cryptocurrency ecosystem. If you couldn't, move $1,000 from this exchange Bitfinex to another exchange in the United States, if the banks wouldn't do that, you could move Tether. So essentially you had this dollar that operated like a cryptocurrency. And it became very popular. It became a very popular way to essentially trade cryptocurrencies. If you wanted to move in and out of Bitcoin or Ether or any of these other cryptocurrencies, you could trade the kind of volatile Bitcoin for Tether and have your money in essentially dollar form so that the value wouldn't keep jumping around. And so it became a very popular way to trade other cryptocurrencies and to move money around between cryptocurrency exchanges.
So I have read, and correct me if I'm wrong, that Tether is supposedly backed by a reserve of U.S. dollars. And if this is true, how can anyone prove or disprove that it actually is?
Right. So the idea with Tether and what this exchange, Bitfinex, has always promised is that in order to generate a Tether and give a Tether to a customer, that customer has to give them $1, and that dollar will be in a bank account. So essentially, every Tether is backed up by real money. That's the idea here. It's a little bit like the gold standard. For every dollar that's out there, there's $1 of gold. That's the similar concept here. Now, there have been a lot of questions about whether this exchange, Bitfinex, really has the dollars to back up the Tethers. And this exchange, Bitfinex, is sort of typical or perhaps even a classic case of the sort of unregulated cryptocurrency exchange. It seems to be registered in the Caribbean. It has offices in Asia. It's never quite clear where it is, what it is. And so there hasn't been a whole lot of transparency around the backing of Tether, whether it really is fully backed up by dollars. And there has been a hue and cry over the last 2 years as Tether has grown bigger for Bitfinex and Tether to bring in an auditor to say, I certify that that Bitfinex or Tether has, the dollars to back up the number of Tethers that exist. And I think a real auditing firm probably could do that. Last year, Tether said that they had an auditing firm that was working on that. And sort of suddenly that auditing firm backed out after several months of allegedly working on it. And that raised a lot of eyebrows. And so still today, there's no real sort of firm evidence out there that these Tethers are backed up. And that has led to this suspicion in the crypto community that this exchange, Bitfinex, is basically just sort of printing money. And that's really the kind of background to this whole concern about manipulation. There's this fear out there that, when the price goes down, Bitfinex just sort of prints some dollars, prints some Tether dollars, and buys enough Bitcoin to push the price up. That's the fear, and that fear has been out there for some time. I mean, I reported on it late last year, and so this is a pretty widespread concern in the cryptocurrency community. This idea that you have this Bitcoin exchange that has an interest in having high Bitcoin prices that can basically just print new money to buy Bitcoin and push the price up. And so that's where this new report this week that came from two academics at the University of Texas, that's the sort of background to it.
So that's the background. What are the specifics, like tangible evidence? What are the things that they point to as evidence of this actually happening? If it's been suspected up until now, and now the researchers are, of course, publishing about this, do they have specific things to point to say, actually, it is happening, and here's
right. And this sort of goes to, the one of the unique traits of cryptocurrencies, which is that you have this record of every transaction that's ever occurred. And you can see every wallet and every transaction that's happened. And so through sort of sophisticated modeling and grouping, you can kind of figure out, okay, these addresses over here are associated with Bitfinex or Tether. And we can see when people were using Tether. And you can also, by the way, see every transaction with Tether, because Tether also exists on a blockchain. So you have this record of all the transactions. And what the academics did is they looked at when Tether moved to different exchanges and how that changed the price of Bitcoin immediately thereafter. Not only the price of Bitcoin, but the price of Ether and a number of other virtual currencies. And in essence, what they saw was that when new Tether were created and moved to other exchanges, they were immediately used to push up the prices of several virtual currencies on those exchanges. And I mean, the way they did this was quite complicated. It involves a lot of sort of statistical analysis. The paper itself was 66 pages long. And there's been a lot of debate since it came out. But essentially what they found was, right after Tether would flow, large quantities of Tether would be created and flow into these exchanges, the prices of a whole bunch of cryptocurrencies would be pushed up. And not only that, but these small periods when Tether were issued actually accounted for most of the rise in the price of Bitcoin last year, and actually even more of the rise in some of these other competing virtual currencies.
So from reading all these headlines, it really seems like Bitcoin is pretty easily manipulated. But then you say that there's records of all these transactions. And I mean, we're getting better and better and quicker and quicker at like going through large amounts of data. So would you say that it really actually is less easy to manipulate it because there's a record?
This is the funny thing about Bitcoin, sort of with all the questions and concerns that people have, it's always both the thing that people worry about and the opposite of the thing that people worry about. So, people always worry about Bitcoin as anonymous. It allows you to buy drugs and send ransom payments. And if you use it right, it is anonymous. But on the other hand, it's very unanonymous because you have this record of every transaction you've ever made. So it's both the most anonymous and the most unanonymous type of money. And that applies to this kind of question of transparency too. You can tell a lot by looking at the blockchain and the record of all these transactions, but we don't at the end of the day know exactly who owned which accounts. So we might be able to see a wallet and know that was a wallet associated with Bitfinex, but only Bitfinex's internal records probably know who really in fact owned that account, the name of that person. And so that's this, the way in which Bitcoin is both very anonymous and very not anonymous at the same time. You can tell a lot. There's a lot of records that don't exist for normal money and normal kinds of trading. But at the same time, there's a lot you can't tell. And so these professors were pretty careful to say, this isn't sort of inside emails showing the manipulation. It's just showing these patterns that look strikingly like manipulation. And it's worth noting that the professor who led this, a professor of finance at the University of Texas, has spotted manipulation in other financial markets in the past and ended up being right about those cases. So, that's why we decided to write about it. This guy has a track record, and the sort of academics and economists who looked at this said that the evidence that he's putting forward seemed credible. But, like so much in Bitcoin, there's always sort of mysteries floating there at the end of the day.
Absolutely. And then, the conversation kind of comes around, and especially lately, around regulation. The SEC has made opinions even in the last 24 hours that are very important to, the evolution of cryptocurrency and everything. Is that the missing component here in this case? Like, if Tether was actually doing this, were they doing something that they should not have been, and would regulation address that?
I mean, I think that certainly, by the way, we're talking about one type of potential manipulation with Tether. There are a whole bunch of other kinds of manipulation in this market that have been sort of out in the open that people know about. There are these pump and dump schemes that people do where they'll get on and say, okay, I'm going to push up the price right now. Everybody get in. And, everybody tries to get in before it's too late. And there is... it's not clear if that's illegal in the stock markets. It's not clear if that's illegal in Bitcoin markets. And I think similarly, what's happening with Tether, it's not clear what laws apply here. And so a lot of stuff happens in these markets because A, it's not clear what the rules are, and B, it's not clear which regulators are in charge. Because these are these international markets. Bitfinex is sort of ostensibly located in either the Caribbean or Asia. And so if the United States had laws barring this, would the United States have jurisdiction to crack down on them? It seems like probably they do. And in fact, there is evidence, we've reported that some American regulators have subpoenaed Bitfinex and asked for records. And so it seems like American regulators in particular are asserting themselves in these markets and saying, yes, there are rules. And particularly now because there are American exchanges that trade contracts related to Bitcoin. So that gives regulators an in, and that may be enough in itself. But I think there's so much that's still unclear about what the rules are in these new markets and who's really watching over them. The main thing, last year when a lot of this was happening, it's just there really wasn't anyone looking over these markets. And Bitfinex, there's nobody who comes to them and says, show us your records, show us your bank accounts. An American stock exchange or a European stock exchange has to prove that it is holding customer money in the right way and has the accounts that it says it has. And at this point, virtual currency exchanges just don't have to do that.
So we mentioned your book earlier that you wrote about Bitcoin, digital gold, Bitcoin, and the inside story of the misfits and millionaires trying to reinvent money. That was 2016. That's 2 years. What are the biggest changes or biggest surprises you've seen between writing your book and now?
Yeah, I mean, there's so much that has happened in the last few years since I wrote my book. I mean, my book was, really about the beginnings of Bitcoin and how this thing arose out of nothing to essentially become this industry. And I think probably the biggest thing that's happened since then is that you've had this whole proliferation of other virtual currencies. And that, started with big ones like Ether and XRP, which did exist when my book came out. But now you just have thousands of them. And in particular, you have this whole market of initial coin offerings where people raise money by selling tokens. And create custom new virtual currencies. And that, I think, is something that really nobody saw coming, certainly 2 years ago. And it was the story last year. It's where regulators are focusing a lot of their attention these days. But I think going back to my book, the first 5 years, in many ways, are the same story as what's happening now, which is this constant struggle between the kind of decentralized law-breaking impulses around cryptocurrencies, the degree to which they're international and outside of the scope of regulators, and these efforts to kind of rein it in, and these efforts by businesses to try to find a way to kind of harness this. And that's really been there since the beginning, and it's still very much the story today.
Yeah. This is a fast-changing kind of field, and trying to keep up with it is a little bit of a challenge. But Nathaniel Popper,
even for me,
yeah, I'm sure. I mean, it's changing so rapidly. But we will definitely be in touch. It's awesome getting you on the show and getting your insight into this. Nathaniel Popper with the New York Times. Anywhere you want to point people to find your work?
My Twitter account at Nathaniel Popper is where I'm updating things the most frequently. But obviously, writing about this very frequently for the New York Times. So had something out yesterday, something new out today about Steve Bannon and his interest in the space. So you never know. I never even know where it's going to go next.
Sounds like an interesting and exciting beat then to be on top of.
Yes.
So Nathaniel, thank you for joining us today. We'll talk to you soon.
Thanks for having me.
All right, take care.